I, Sam Fagan, head of U.S. payments at Polygon, and you're watching Taking Stock.
Let's rock and roll, folks. Let's do it. Welcome to the show. 2 minutes to go here until the close. Major market indexes are in mixed territory here as we enter the final auction for this Wednesday, January 14th. The New York Stock Exchange Composite Index and the small caps are in positive territory, but the Dow 30 component and the S&P 500, a little bit of profit taking off the top here today as investors rotate out of big tech and discretionary stocks. Energy, staples, and utilities, those are your big leaders for the S&P 500 today, but we are seeing losses to the downside in the final minute or so of the trading day, led by the aforementioned discretionary stocks, technology, as well as telecom. Welcome to the broadcast, one and all. You're watching Taking Stock. I'm your host today, JD Durkin. Mere moments away from the ringing of the iconic closing bell here at the big board. The team from Marsh, ticker symbol MRSH. They are set to do the honors and ring the bell momentarily. They will also be on the show in just a bit, as is the great Kai Wu. He's on deck. He'll join us right after the bell for his take on the Fed, on gold and silver, on today's price action, and much more. Volatility up on the day for this risk-off trade. The VIX reaching its highest level going back to December 1st. Gold and silver both reaching fresh all-time highs. Believe it or not, once again, silver reaching $92 an ounce. Today, 1 year ago, it was only at $30 an ounce. We'll pick up the rest of our market analysis on the other side of the opening bell. The crowd is fired up. We are fired up. Time now for the close. I've been doing the job long enough to know that when the entire crowd is cheering, it's a good time for me to quiet down. Your final tail of the tape on this Wednesday, January 14th. The S&P 500 will sell off about 0.5%. The Dow Jones will sell off 0.08%, fractionally down. The NYSE Composite Index up 0.3, and the small caps reaching a fresh all-time high here, I believe, on the day. Yes, we do. The Russell 2000, a fresh all-time high of 0.7% on the day. Oil and energy stocks, defense and aerospace, healthcare and biotech, all catching a bid, and that's about it. A fair bit of negative breadth across the tape. Let's bring in our good friend Kai Wu, founder and CIO at Sparkline Capital here for a jet. Look at all these people I brought for you for the bell here, my man.
What a great audience. Thank you so much.
Thank you for being here, of course. So we're a couple days here off of all-time highs, a little bit of profit taking, maybe wait-and-see mode for investors to digest big bank earnings, other pieces of economic data. What's on your radar? What are you tracking in these markets, Kai?
Well, I think you mentioned big bank earnings. We're at the start of the quarterly season, and we had JP yesterday, Bank of America today, Wells Fargo, and Citi. What was interesting from this was that the results were not bad, mixed, but the stocks themselves took quite a beating. The market reaction was quite negative, with these names falling 4 to 5%. So what does that say? I think it's less about the idiosyncratic prospects of these firms and more about macro headwinds facing these firms. We have Trump trying to impose 10% caps on interest rates on credit cards, and more broadly, these companies are bellwethers for the macro economy. And I'm sure we'll talk more about some of the political and geopolitical risks facing the economy. Jamie Dimon yesterday, when he gave his remarks, talked about how the economy is resilient, the consumer is spending, and the job market is not softening further. But there are, he called them hazards, tail risks out there, whether inflation, valuations, or geopolitical risks that lurk in the midst that he thinks investors are underappreciating currently.
There's a lot of geopolitical uncertainty. We heard Jamie Dimon talk about it. It's also a midterm election year. Things get wonky for the historical or the seasonal indicators. What else is on your radar to give you some sense on how these big issues, which have a lot of uncertainty, may play themselves out here in 2026?
Well, look, the big thing is Fed independence, right? So we had an unprecedented thing happen where Jay Powell went out there and said, look, guys, there are criminal charges being brought against me related to the Fed renovation and his testimony in front of Congress. But this goes back to a larger struggle between him and Trump, where the administration has been putting pressure on Powell and the Fed to cut rates. And so far, Jay Powell has held the line. We have the Lisa Cook situation, and this is just kind of the escalation of a battle between these forces. So far, it feels to me that Powell's winning. You have the former Fed chairs, Bernanke and Yellen, Greenspan, as well as current sitting chairs across the globe supporting Powell. You have various politicians in Congress on both sides of the aisle, as well as Diamond and other bank executives. So far, I think he's in a good place, and we'll see how things play out. It may well backfire for Trump, but that's something certainly to watch and is a looming risk. The related topic, of course, is something that did not happen today, but there was a chance that the Supreme Court would rule on the tariffs, the constitutionality of Trump's tariffs. It turns out that they deferred that decision, but that is, of course, a very impactful thing that will likely come into play down the line, and so far is continuing to contribute to uncertainty in markets as we wait to see what happens.
Yeah, it's a question if the government's got to basically refund the several billions of dollars they've already collected. We'll kind of wait and see how the rest of that story plays itself out. I got less than a minute. Silver reaching $92 an ounce today. 1 year ago, it was $30 an ounce. What's going on with the metals?
I mean, it's kind of an incredible story, right? Because normally you think of gold and silver, the precious metals, both at all-time highs, as being kind of these safe haven assets, things that people buy when they're worried about volatility in markets. Yet, if you look at the past year, these two assets are up 80 to 300%, and the stock market's also up. So we're at a weird setup today where the stock market's at all-time highs, as are precious metals. What does that say? It says that people are bullish on the economy, they're bullish on the prospects of the continued strong earnings for U.S. companies, but they also are very wary of these building risks to Fed independence, to the macroeconomy, to geopolitics that could potentially lead to issues that metals might protect against.
Yeah, of course, lots of uncertainty. I feel like that was the word of the year for 2025. Might as well keep that trend going.
That's
here
right.
For 2026. Our good friend Kai Wu, founder and CIO at Sparkline Capital. Thanks for being here to kick off the broadcast as always, my man. Good to have you.
Thank you.
Joshua, grab your microphone. Bobby, you and I are going to wade through the crowd. Pardon me, one and all. We're going to take the broadcast right through you all. Excuse me. Hi, everyone. Hi, Mel. What's going on? Hi, everyone. Hello, hello. All right, now we're going to bring you the latest earnings numbers that we got from the team at Wells Fargo earlier this morning. Net interest income. That's the big question for the big banks this earnings season. It did climb 4%, but still a bit short of Wall Street's expectations. Earnings for Wells Fargo hitting $162 a share, beating last year's numbers, but kind of missed on the quarterly estimate overall. Josh, what happened here with Wells Fargo stock? 4.5%. Shout out to Josh there with the facts. The bank dropping more than $600 million on severance as CEO Charlie Scharf continues aggressive job cuts. We will see what the rest of the big banks have to say as the first week of so-called earnings palooza, that's at least what I call it, rolls along here on Wall Street. We'll take a look at a few NYSE notables. Today we're going to look at two sectors. They really tell the two sides of the tale of the tape. Let's start with the best performing sector so far in the S&P 500 this year. That is energy, the biggest weightings, holdings by weight rather. ExxonMobil, Chevron, Conoco, Phillips. The big storylines here, like Kai and I were just talking about, geopolitical unrest in Venezuela and Iran, plus supply constraints. Really, this was the primary defensive hedge trade for investors on Wall Street today, as we saw a little bit of selling off in the broader S&P 500. On the other side of that tape, how about the strongest performing sector we've got so far here in the young 2026? That is, of course, financials, down a little bit here on the day. This is the worst performer, rather, down 2% for the year. The top 5 names by weight: Berkshire, JPM, Visa, MasterCard, and Bank of America. Some cautious guidance this week from JP Morgan on net interest income, the so-called bulge bracket banks we heard from today, Wells, B of A, Citigroup, etc. Maybe just adding a little bit more uncertainty on the overall state of loan growth. And we will see what financials and energy alike continue to do the rest of this week. All right, Cheddar's very own Chris Castellino now brings you a breakdown of all things robotics from CES 2026 in Las Vegas, Nevada. Take a look.
Here at CES 2026, robots once again dominated the show floor. From industrial warehouses to your own living room, AI and robotics have converged in ways that are reshaping how we live and work. Here's a closer look at who's leading the robot revolution. First up is Boston Dynamics. The company has been defining the future of robotics for decades. From viral videos of robots doing backflips to their commercial Spot robot, they've captured the world's imagination. Now they're unveiling their most ambitious product yet, the all-new Atlas humanoid robot.
We are so excited to be launching our newest version of Atlas, which was really specifically designed to do industrial work and was designed in collaboration from all of our customers' feedback that we received and all of the different types of people that want to use Atlas in their facilities.
Atlas stands 6 feet 2 inches tall with a vertical reach of 7.5 feet, allowing it to grab objects from top shelves and reach low to the ground. The robot is built for the most demanding environments, operating in temperatures from -4 to 104 degrees Fahrenheit.
What we're really designing this robot for is to actually be able to do the hardest work in a facility. We're lifting 110 pounds at our max capacity and 66 pounds at a continuous rate. We're not just saying we're doing challenging tasks, we're building a superhuman robot that can do the most backbreaking work.
But raw strength is only part of the equation. Boston Dynamics has announced a major partnership with Google DeepMind to supercharge Atlas's cognitive abilities.
Our partnership with DeepMind enables Atlas to be much more general purpose. So our goal of that partnership is to build a brain for Atlas that has out-of-the-box intelligence, so the process of deploying the robot is much faster because the robot shows up smarter, and then the additional training you need to do once you get on site to get the robot up and running is way shorter. I visited one facility where a woman was picking up stacks of cardboard boxes and weighed about 50 to 60 pounds, and she's moving them continuously for 8 to 12 hours a day. That task is not able to be automated today with existing automation or technology. And so I talked to her and her team, and they said, yeah, she's amazing at her job. And so we want to move her to an area where she's going to be doing way more impactful work that's a lot more interesting. And so those were the stories that stood out to me in industrial environments. That is really where we want Atlas to be.
Boston Dynamics isn't the only company betting big on humanoid robots for industry. Meet Humanoid, a rapidly growing company with 200 engineers building what they call the future of work. Their Alpha robot is already being deployed in factories across the world.
We have wheels and we have already can deploy with the current certification, and we will catch the market faster because it's a lot of problems with the safety and regulation, and our robot we can already deploy across all industrial.
The company is leveraging NVIDIA's robotics platform for everything from computing to AI training.
We are adding every month a new additional use case. We want to cover all industrial use case in the next 2 years.
One of Humanoid's biggest partners is German auto supplier Schaeffler. They say deploying these humanoids into existing infrastructures is often seamless.
With a humanoid form factor, basically you can roll into existing workplace. The big part is really the AI-based training. So this gives us a great amount of flexibility to use these robots on multiple different applications throughout the whole value stream. So starting from logistics, material handling, going to assembly processes, also quality inspection in packaging.
Rich Tech Robotics started in hospitality with robots serving food and drinks. But their newest creation, called DAX, marks their ambitious expansion into industrial automation.
DEX is the newest addition to our lineup. So he is a 2-armed humanoid robot that is mobile and also stationary. DEX, he's accelerated by NVIDIA technology, meaning he's able to see his environment, he's able to perceive what's going on around him and make intelligent decisions on the fly. So what that allows him to do is to be able to work with machinery, work with tools to complete manufacturing tasks. He can also pick up objects and examine them for quality assurance. And essentially he's meant to work alongside humans to automate the dull, dirty, and dangerous.
The company believes that DAX's vertical track system is a game changer for warehouse and manufacturing environments.
He's going to be able to see his environment and then adjust to the height that he needs to go to be able to complete his task.
After walking the floor at CES 2026, one thing was abundantly clear. The AI robot revolution is no longer science fiction. It's happening now across every single industry. The only question remains is how quickly we can adapt to this new reality. For Cheddar, I'm Chris Castellino.
Welcome back to the show. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. Time now for the latest headlines you need to know in the world of fintech, crypto, and AI. First of all, at this hour, Arsenal with a 2-0 lead over Chelsea. Jeremy, that's for you. As for the crypto majors, a nice session here on the street today. Bitcoin up 2.3%, ETH up 1.7%, and Solana, a strong performance, up almost 3%. Next up, lawmakers flooding the Senate's crypto market structure bill with dozens of proposed amendments, setting up a high-stakes fight over stablecoin yield, the rules of DeFi, as well as ethics as the bills move towards a key markup on Capitol Hill. And finally, cybersecurity startup Torque raising $140 million in a Series D round at a new valuation of $1.2 billion, betting big that AI agents can automate security operations for enterprises as well as for government agencies. Let's now bring in the CEO of Torque himself, Ofer Smodari. It is great to have you here, and congratulations on the last announcement we just had there on the show. Great to have you here.
Thank you for having me.
So let's start first and foremost with the latest round. What does this allow you and the team at Torque to do that maybe you previously could not do?
Expanding to other geographies, expanding our go-to-market team, especially into the federal market. We are thinking about acquiring new companies and capabilities and keep pushing the innovation to the limits.
What does this say about where AI-driven security opportunities not just are today, but where they are headed?
So we believe that we are calling it the SOC, Security Operations Centers, is moving to become kind of like an autonomous place, meaning that there are like 5 levels of autonomously, like similar to cars, right? We are at like level 3, and AI is providing us the capability to move to level 4, meaning that you will need to use less people to do all the hard work of triaging security alerts, which is like the biggest threat to enterprises today.
What changes when AI agents run security ops?
What changes? AI can do several things that up to date needs to do like manually.
Okay, amazing. How do you balance speed and automation with human oversight and trust, making sure it's a little bit of a balance between both sides?
So transparency, guardrails, we are providing, platform, and the path to understand what AI agents can actually do, and more importantly, what they cannot do.
How has the conversation over transparency and guardrails changed over the last year? And in what ways do you most suspect it may continue to change and evolve here in 2026?
So I believe like AI will be a lot more accurate, okay, and we'll continue to provide the right tools to make sure that AI is not like hallucinate and do things that it's not supposed to do.
Why is right now the right time for AI-driven security, especially for government?
Because I think that's because of like the geopolitical situation, government are being attacked hardly. Like I talk with like a CISO, it's like a big agency, they have like 1 billion security events a day. And it's like growing like 20% every quarter.
What is the feedback or the pain points that CISOs tell you about as they're trying to secure their enterprise or government or any of the clients that they represent?
They want to build a new defense system for their organizations.
Amazing. And obviously you always want to stay ahead of the threat actors, because oftentimes the threat actors are dealing with the same technology, the same tools that the so-called good guys are using.
Exactly.
So what does that ongoing fight kind of look like in that balance to
I'm
stay
calling
ahead?
it, so what we're providing is like a very machine speed platform, okay? Meaning that we are seeing the velocity gap, meaning that we, as like an enterprise, need to respond a lot faster, okay? Because the bad guys are using AI as well, okay? To build like new attack vectors that used to take like months to build with highly qualified people in minutes today.
Ofer Smodari is the CEO of Torque. Congratulations on the big raise. Thanks a lot for being here on the show. You're welcome back anytime.
Thank you so much.
Nice to have you folks. Don't go anywhere. Much more Taking Stock coming up after this quick break. Let's do it. Welcome back to the show. We'd now like to welcome in two very special guests who would be special even if they weren't the people who rang the bell here at the New York Stock Exchange, but all the more so. Say hello to Mark McGivney, CFO of Marsh, and Nick Studer, CEO of Oliver Wyman. Mark and Nick, great to have both you guys. Thanks for being here.
Thanks for having us.
Can I start first and foremost? What was the experience from both of you guys to ring the closing bell? You had a huge group down here. They were fired up today.
Yeah, it's a terrific experience. It's an exciting day for us, rebranding the company and celebrating that, so it was a fantastic experience.
How about the experience for you down here at the big board today?
And the day's been all about bringing together all of our people across our businesses in a place which is the cradle of capital formation. What better place to celebrate it?
Yeah, I always call this place the Yankee Stadium of finance. There's lots of great idioms to use. Give me a perspective for any of our viewers a bit unfamiliar. What is the kind of corporate marriage, so to speak, here between the firms and the details people should know if they don't know too much?
So we're a 155-year-old professional services firm globally. So we operate all over the world, servicing companies of all sizes. And Marsh is probably best known for insurance and risk management, but we're so much more than that. We really bring a unique set of capabilities across reinsurance, capital advisory, people, and all the talent aspects of serving companies, and strategy and management consulting. And so what today represents is really making sure clients and everyone, when they think of Marsh, they think about that full set of capabilities that we bring.
Yeah, he pointed over to you when he said strategy. Talk to me about the Oliver Wyman side of this, and why does this relationship make so much sense from your side of things?
Yeah, I mean, we are today announcing both the formation of Marsh Management Consulting, which is the sort of holding business, the division in which, the business in which Oliver Wyman sits. Oliver Wyman brings world-beating strategic advice, and in concert with our sister businesses in Marsh Risk, in Marsh Re, in Mercer Guy Carpenter, it's a set of capabilities from transaction all the way through to strategy, which is what's needed to navigate an ever increasingly volatile world for our clients.
Absolutely. Mark, correct me if I'm wrong, a new ticker symbol here as well. What should people know if they're interested in learning more about the investment product itself?
Well, we're a, as I said, 154-year-old global professional services firm. We changed the ticker today to MRSH. I can't recommend us as an investment any higher. We are a company that does good work that matters. The work we do drives growth. As I said earlier, we have a unique collection of capabilities, and we have driven value for our investors over a long period of time.
Nick, how would you describe the overall state of financial services today, and how closely do you have to track the general macroeconomic backdrop for the work and the new relationship here?
Yeah, it's a pretty interesting time for financial services, obviously coming off a really juicy period of prosperity, of growth, a lot of issues that the clients of financial services need, but a lot of change as well. So, the AI funding boom, is that something which is going to evolve happily, or is it something that's going to burst? How does AI change customer behavior in financial services? Huge innovation on the insurance side. So, I spent most of my time actually advising financial services clients within Oliver Wyman and within Marsh. It's a very exciting time in their industries too.
Yeah, and before we wrap up, talk to me about a few of the big catalysts here for the year ahead that are on your radar, things you're paying attention to, and ultimately now really top priorities now that this is official.
Well, growth remains the top priority for the firm. We're a company that has generated consistent growth, whether it's organically or redeploying the substantial cash flow we generate every year to high-quality acquisitions. So it's about growth and really leveraging the power of this perspective that we bring to make sure that we're bringing everything we can to clients around the world.
Mark and Nick, congratulations on all the success. Thank you guys for joining us down here at the big board. You're welcome back anytime. Thanks for bringing the hype. What a great crowd here today for the close.
Thank you for having us.
We'll have you guys back again soon. Folks, don't go anywhere. Much more Taking Stock coming up after a quick break, including the latest from Scarlett Sieber at Money 2020. Don't go anywhere.
Welcome back. I am Scarlett Sieber from Money 2020, and this is Jargon Translator, where we make sense of the techie terms that keep popping up in your crypto feed. Today's word, layer 2. Sounds like a skincare routine, and I love me a skincare routine, but it's actually how blockchains level up. So here's the tea. Blockchains like Ethereum are amazing, but they're slow and expensive when traffic spikes. Enter layer 2 solutions. Think of layer 2 as the express lane on a crowded highway. Instead of every car or transactions jamming the main road, layer 2 handles the overflow, processes transactions off-chain, and then settles them back on the main blockchain. It's like saying, hey Ethereum, you keep being the backbone, we'll handle the chaos. Why does this matter? Because gas fees on Ethereum can feel like rent in Manhattan. Layer 2 solutions slash those costs and speed things up. Suddenly, buying an NFT doesn't require a second mortgage, and people have done it. Go ahead and check me. How does this work? There are different flavors. Roll-ups, they bundle transactions together and post them to Ethereum in one neat package. Think Costco for crypto transactions. State channels, like opening a private tab with your friend for multiple transactions, then settling the bill later. Sidechains, independent blockchains that connect back to Ethereum for security reasons. And here is the kicker. Layer 2 isn't just about saving money, it's about making decentralized apps usable at scale. Gaming, DeFi, NFTs, they all need speed and affordability to really go mainstream. That's the biggest criticism right now. Without layer 2, Ethereum would be stuck in traffic forever, and we all hate those traffic jams. Of course, it is not perfect, nothing is perfect. Security depends on how well these solutions interact with layer 1. Bugs, exploits, and bridge hacks, still a thing, but the innovation is wild and billions are flowing into layer 2 projects because everyone knows scalability is the name of the game and the name of longevity. So next time you hear layer 2, don't think skincare, think blockchain's glow up moment. Layer 2, because even blockchains need a fast pass to keep the vibes moving. And that is your jargon translated.
Arsenal up 2-1 over Chelsea. The small caps here on Wall Street hitting a fresh record high in the New York Stock Exchange Composite Index. Also up, but a little bit of profit taking, just a bit, for the Dow and the S&P. Tomorrow here on Wall Street, lots of earnings in the morning. We'll hear from Taiwan Semiconductors, Goldman, Morgan Stanley, and BlackRock. 8:30 a.m. initial jobless claims. That's going to do it for today's broadcast here on Taking Stock. Have a great night. We'll see you again tomorrow. Woo!